When something's too good to be true, it typically is. Only the responsible lenders are left. Bitcoin is a $1 trillion asset class.
Yeah, it never sleeps. It's 24 hours a day, 7 days a week.
It's-
Like you never know when it's going to have a big jump. Dealing with institutions, what interest are you seeing from them?
So institutions are coming in many ways, and there are no accidents in these big companies.
Mauricio Di Bartolomeo,
founder and chief strategy officer of LEDN Cayman SEZC Incorporated. Started as a passion project with a few close colleagues, has grown to a global company with 50+ employees, offering a full suite of lending, savings, and trading products in over 120 countries.
Because Bitcoin is such a high-performing asset. They're some of the smartest people in the world, and it's been around for more than 10 years now. Like, they definitely know probably everything there is about Bitcoin and Ethereum and crypto in general.
They know a lot more about the space than people give them credit for, right? They were the Bitcoin ETFs were the most successful ETF launches in history.
Digital gold Bitcoin, we know that's its own asset. It's the most decentralized. It's the first. It's got its place in the world. Welcome to the podcast. I'm speaking with Maurizio, who is the CEO and co-founder of LEDN. Could you start by maybe just telling us what is LEDN?
Yes, thank you for having me here. LEDN is a very simple business. We let people put their Bitcoin as collateral to get a loan instead of selling it, similar to how you borrow money from your house when something comes up, a home equity line of credit. That's most people know it. And at LEDN, you just use that Bitcoin instead of the house. You bring it, place it as collateral. We lend you up to 50% of the value of the Bitcoin that's placed as collateral, and you still own the Bitcoin. It's you still own the upside, and when you repay the loan, you get the Bitcoin back.
I was at your side event earlier today. The breakfast, that was really nice. And one thing that stood out is that you guys have a very conservative approach to risk management, and you've been around since 2018. How have you seen your competitors kind of like be kicked out of the space because they're too risky, or how have you seen the space play out since then?
Since then, it's been complete. I would say it's been a renaissance. I think leading up to 2021, you had an era of irrational exuberance. You had people that had raised, some of these lenders had raised money through ICOs. ICOs can be poisonous to the culture of a company because you raise money and you never really sold equity. You don't have any members of the board of directors. There's no governance for you as a founder. You basically just go and do whatever you can technically go and do whatever you want.
Yeah.
And many of these guys did. They got outrageous budgets. They started sponsoring crazy things, offering interest rates that were not market. And when something's too good to be true, it typically is. And we saw that really play out. You had people that they created an illusion of growth by minting tokens and offering rates that weren't market. But that's a really quick way of getting clients. You can get noticed if you overpay for certain things.
Kind of like Terra Luna with their 20% APY, and everyone's like, how am I getting that on a stable coin? But jumping in anyway.
100%. And Celsius, in many ways, was the equivalent of Terra Luna in the CeFi world, where they were offering people the ability to borrow from their Bitcoin at 0% or 1%. And they were paying, in terms, I think in dollars, at one point, they were paying up to 12 to 14%. And I had clients asking me, I had clients doing withdrawals at times to take it out to Celsius. And I would sometimes jump on the call and they would say, no, I'm taking it to Celsius. And I said, that's great. Feel free to do so. What could we have done better? And they said, well, they're just paying me more. And I said, well, a 12 at Celsius is very different than an 8 at LEDN, because I can tell you exactly how I pay you the 8. I turn around and I land it at 10. You can see my rates; they're posted. That's how I get my 8. Celsius is lending dollars at 0%, 1%, and they're offering you 12. I would ask them, if I were in your shoes, how they're getting the 12.
Yeah.
But none of them did. Very few of them did. And the reality of, we later found out how Celsius was getting those yields was through Terra Luna.
Yeah.
And so the collapse of Celsius was basically driven by the collapse in Terra Luna. People saw that they were pulling assets out of Terra Luna. And then they said, well, if they're pulling assets out of Terra Luna, I want to pull assets out of Celsius.
And once
so,
it starts, it's
and then the
impossible to
cascade just goes
yeah.
down. Now, since the wipeout, what we have seen is only the responsible lenders are left. Really, there's only LEDN and a few others that aren't necessarily focused on Bitcoin-backed loans, but we are the really only remaining, single vertical company that focuses only on this. And we just have seen a lot of that demand concentrate. At the beginning, there was a shock in the customer base after the wipeouts because people lost trust in general in the industry as a whole, in the idea of borrowing against your Bitcoin or putting your collateral with someone else. But through really just hard work and transparency, people were able to regain back that trust and came back when they needed those loans because they continued to need the loans. But I think among the things that we did are we've always done proof of reserves. We were the first lender to do them. We still do them today. We have an open book report which shows clients how we're using assets, and that comes out every month. Clients can see how LEDN is using assets to pay you the yield that we pay you. And we're SOC 2 certified. We are, we operate at a level of transparency that I think no other company in the space does. And this is why, and we're regulated. We're regulated by SEMA and the Cayman Islands, which, by the way, is a regulation that other lenders tried to get and couldn't. So a lot of those things have kind of come together to help people feel comfortable with working with us. And, we've seen an explosion of demand in our business, all sides of the business, whether it's institutions borrowing Bitcoin from us or clients posting Bitcoin to borrow dollars from us. Everything, we've broken all sorts of records. This year so far, we've originated over $1.16 billion of loans, institutional and retail. And we are basically, we've broken every sort of record that LEDN ever had in terms of originations. And all of those numbers are continuing into Q3, and they're even ramping higher. Because, I've always been a big believer in Bitcoin-backed lending. Bitcoin is a $1 trillion asset class. Like I was saying in the speech today, if 10% of people look to get financing on that Bitcoin, that's a $100 billion market. And we all know that the size of Bitcoin is only going to get bigger. And as more people learn about that they can borrow from their Bitcoin and get dollars, more and more people are going to do that. So it's going to be, I think the percentage of people wanting loans from their Bitcoin is going to grow, and the size of Bitcoin as an asset class is going to grow. So we could not be more excited about, being the leaders in this, what we think is going to be a massive market.
Bitcoin is very volatile though. How do you educate them about the risks of lending and kind of not getting liquidated and that whole shebang?
That's a really good question. So when a client comes to LEDN, they come to us because they don't want to sell their Bitcoin. And they take out a loan. The last thing any client wants, and the last thing LEDN wants, is for the loan to have to be closed. So we almost to a fault, I don't want to say bombard the client, but we basically try to be very explicit in telling them that the only collateral we have to underwrite the loan is the Bitcoin. So if the market value of my collateral approaches the number that I issued to you, I have to sell it so that I can keep the company and make myself whole again. If I don't do that, I put the entire thing at risk. So we are very, we're really big on education. So we tell you, listen, this can happen. These are the risks. Make sure you put some Bitcoin aside. Don't bring all your stack to put it as collateral to borrow, because you may need to come up with more later on if the price goes against you. So that we are big on education. Number two, we give you tools. So LEDN has this feature called auto top up. So when you take out a loan, you can put a little bit of extra Bitcoin aside on the transaction account, which is in custody, and you pre-authorize us to move that Bitcoin if your loan ever needs it. And what that does is it protects you from being able to top up the loan if Bitcoin moves when you're asleep, hiking. We've seen everything. We've had Bitcoin move when people are on cruise ships.
It never sleeps. It's 24 hours a day, 7 days a week. Like you never know when it's going to have a big jump, 20% down or up.
You got it. And so we wanted to build something that was able to help people protect against that. And we did this through this auto top-up feature. And I'm proud to say that the people that have used it today, out of 100% of people that have used it, 99.9 have protected their loans from liquidation. There was one guy who set up auto top-up, but he just had dust in the account, and just the amount that went over just wasn't enough. So so basically, when we look at the numbers about loans that have been liquidated with auto top up, there's really this guy that's an outlier because he just didn't plan the auto top up feature well enough. But in general terms, most people that use the feature and have the sizing right are can use the product and feel pretty comfortable that and it's battle tested. We've had that feature work thousands of times with the clients before. Most recently in this sort of yen carry trade unwind when there was a big gap down.
That was a big one. Hey.
So but a bunch of people that all of the clients that had it on, we saw very few liquidations, in fact, during this downturn, and on a percentage basis, we see less and less clients get hurt when the price drops, because that means our education isn't working. The tools that we're giving them are working, so our clients are getting smarter, and that's what we love to see. We want like I said, when a client comes out and they have the loan liquidated, it's a bad outcome for LEDN and it's a bad outcome for the client. We lose a loan.
Bad experience for everyone, really.
We lose a loan. We work day and night to originate loans. That is our sole mission, or one of the biggest missions. Our loan has 2 clients. We also have to get capital partners and a bunch of other things. But by and large, we work very hard to get originations. The last thing we want is for that origination to go away and us having to close the loan before the client wanted to close it.
Do you guys over collateralize the loans a lot? Like what is the rate?
It's 2 to 1.
So 2 to 1. Okay, so if I wanted a loan, I'd have to give you
If you want 10,000, you put 20,000 as collateral.
So I would get basically liquidated if it drops by like 50%, or is it a similar?
So the liquidation threshold, you start at 50%. If the price goes down, that LTV, the loan to value ratio, starts going up. Because it's basically what we lent you divided by the value of the collateral. So as the collateral value drops, that ratio starts going higher. So from 50, when you get to 70, we say, hey, Tahir, you need to send us more Bitcoin because your loan is close to getting liquidated. Then at 75, we continue to send them to you. And if it gets to 80, our system has to automatically liquidate the loan and close it. And then whatever Bitcoin's left, we give you back to your transaction account.
Have you, with the ETF that's come in and more institutional money coming in, I know that a lot of wealth managers have let's say they say 1% allocation to Bitcoin, for instance, and if the price of Bitcoin drops, their allocation goes less, so then they have to buy again. So it kind of like creates less volatility. Have you seen that in play since the ETF started?
I think I think it's outside of this recent episode with the yen carry unwind. I think Bitcoin has been very stable in terms of volatility. I think if you look at the numbers, Bitcoin on a percentage basis has been less volatile than Nvidia. And so
Nvidia is like that's its own meme coin, and like that volatility is insane.
But a lot of people in Wall Street like to say, oh, Bitcoin's too volatile. Well, you're trading Nvidia. So it is volatile, but as the asset size has gotten bigger, I have seen and if you look at this historically, if you look at Bitcoin's in 30-day, 90-day, 60-day volatility, in all instances, 30 days have been too soon or too short of a time frame. But if you look at it on an average and you go back in time, the rolling 90-day volatility for Bitcoin has been coming down and down and down and down. And that's exactly what you want to see from a maturing asset, right? That's literally textbook what you want to see, and that's what has been playing out. So I think as more people enter the market, you're gonna see Bitcoin be even more stable. Like Bitcoin at one day, I believe, will trade like gold. Gold's not a very volatile asset. Gold just goes up steadily and to the right, and there's always a buyer, there's always a seller. So it's a market that's very deep. And balanced. So I think Bitcoin will eventually get there. And there's going to be bumps along the way, but I think eventually we're going to see Bitcoin trading a lot like gold.
Talking about volatility, I know that you guys have a new offering now where you can post your Bitcoin as collateral, take out fiat or USDC, whatever, and then buy more Bitcoin and post that as collateral, and then take out another loan against that. So what is the inspiration between that play?
So the product that you're referring to is B2X.
B2X,
so
yes.
What people use our service, when we first built out LEDN, we had one product, Bitcoin backed loans. So we always like to see what people were doing with the loans. And what we found was that a lot of people actually, in the early days, it was around 40% of people. 40% of our clients were coming to LEDN. They would put, let's say $1,000 or let's say $10,000 worth of Bitcoin, get a $5,000 loan. Take that $5,000 to an exchange, buy $5,000 worth of Bitcoin, bring that back to LEDN, take a $2,500 on LEDN, take that Bitcoin to an exchange, or dollars to an exchange, buy more, and just keep doing that until they maxed out the leverage or the loans that they could get on the Bitcoin. So we said, well, wouldn't it be just easier if you come to me with one Bitcoin, I will just buy the additional second Bitcoin, you'll have two, and I put them in custody, and it's very much like a loan.
Oh,
It's effectively the same underwriting, but you're just using the proceeds to buy more Bitcoin. And so that became our most popular product for a really long time. I'd say today, actually, our Bitcoin-backed loans are bigger in dollar volumes than B2X's, but I think that ebbs and flows depending on market conditions. But one of the biggest use cases of our loans were people trying to buy more Bitcoin. And so we made a product that did just that. And it did really, really well. It continues to do very well for us today.
Kind of let you like take on some leverage and take a bigger
In some
position
ways.
without having money. The risk though of being liquidated on that, because now it's got a kind of multiplier effect, doesn't it?
No, it's the same as the
Oh, the
original
same concept,
loan.
actually, yeah, it
It's
wouldn't
the
change.
exact same
Yeah.
underwriting. And so this is why when we were sitting at the office, I still remember when we were brainstorming this product, and there was one person on the team that had a hard time kind of understanding how we made it happen.
Yeah.
But it's like, no. Like, if you bring me two, I can give you a loan for one,
Yeah.
right? And it's no different than if you give me one, I give you a loan for one and buy the two. So it's the same math, it's the same underwriting. And for you as a borrower, the risks are the same. You just have to make sure you have enough Bitcoin to top up that loan if it comes down on you.
Yeah.
But effectively, like for you as a client, there's no real difference on how to manage risk on either one of those two. They're identical.
Yeah. So you guys are definitely, I want to say, a more professional firm in the crypto space. Like by far, like there's a lot of degen like projects out there. Dealing with institutions, what interest are you seeing from them firsthand in Bitcoin, in Ethereum, in crypto in general?
A lot. I would say this year has been, as I was telling you earlier, I mean, we've broken all sorts of records in terms of originations. So institutions are coming in many ways, but I'll give you two examples. One is we just announced the first ever syndicated Bitcoin-backed loan from a bank to a Bitcoin lending company, which was the loan we announced with Sygnum, bank out of Switzerland. They originated a $50 million loan for us. We posted collateral for that loan. And now the bank, as the underwriter of that bond, can turn around and sell that bond to another bank or to another investor and then do it again.
Yeah.
So we've created effectively the first Bitcoin-backed loan bond that trades in the secondary market.
That's
and to us, that's a huge, it gives us immense pride. And I think this is the beginning of a new wave for this industry, because I think you're going to see a lot more of these types of loans thanks to us. And that's only going to bring more capital to the space, make our loans cheaper, and make people more, make our loans even more compelling to the consumer. And after we made that announcement, we've had quite a big uptick in inbound from other banks and other groups that are interested in doing the same with us. So on one side, banks are our biggest funding partners today are banks. Which 2 years ago they wouldn't pick up the phone.
Yeah.
And so
they wouldn't even like let you do payroll with them.
No, well, exactly. Like it was hard to get a bank account.
Yeah.
But now they're funding our loans.
Crazy how that changes.
And then the other one is, there's groups like BlackRock that have been really coming up to speed with this in the space. They're getting close to the right people. They have really interesting plans for what they want to do in the digital asset space. We did an event that had speakers from BlackRock in Mexico City. We had a few of them come to this event today again. They are they know a lot more about the space than people give them credit for, and they're doing a lot of big things that I think are going to impact the entire ecosystem. And
I think Bitcoin is such a high performing asset. They're some of the smartest people in the world, and it's been around for more than 10 years now. Like they definitely know probably everything there is about Bitcoin and Ethereum and crypto in general, and they're maybe just not showing it, or maybe
no, I
people just
think
don't give them credit for it actually.
no. So well, there's a bunch of people. I mean, obviously it's a massive company, and I can't speak for them directly because they're it's it's their business. But what I can tell you is there's big appetite internally, like even at the leadership level, like Larry Fink won't shut up about Bitcoin on CNBC, and so that you have buy-in from all levels of management. The people that are actually executing on the ground, they're a much younger generation, and they get it. Like they're smart people, and they get the space, and there are no accidents in these big companies. Like when Fidelity announces an ETF, when BlackRock announces an ETF, they're not. This was a decision that took months, years to get to, and they're very deliberate about these decisions.
Yeah.
So, and they have a very long-term plan around it, right? They were the Bitcoin ETFs were the most successful ETF launches in history, and you can bet that they're going to try to redo it again. The ETH ETFs didn't fare so well, but that's not to say that a 2x Bitcoin ETF won't do great. Or a short Bitcoin ETF won't do great because people can use it as a hedging tool. So there's all sorts of iterations that I think you're going to start seeing around Bitcoin and ETFs and digital assets and ETFs, whether some people like it or not. I think it's probably not going to stop at Ethereum. Eventually, it's going to continue expanding.
I actually want to get your take on the Ethereum ETF. So I've been thinking about it, and they don't give you staking rewards. They're not allowed to do that, right? Now, for most people, that's just like a convenience fee. They're okay with it. But now when you're talking about professional investors, that yield of 3-4% that they're giving up on is not something that they can just ignore or like justify to their clients almost. Are you seeing the same?
So, we support ETH on the platform, and what I can tell you is that for me personally, I think the challenge that ETH has beyond the staking piece, like I think you make a very good point in that you're kind of giving up but that's a very crypto native centric way of thinking, right? Like if you ask a Wall Street person, hey, do you want to stake your ETH on this protocol and you may get slashed? And they might say, well, what's the risk of slashing? How do I know that thing's not going to get lost? Like there is some risk to staking that doesn't exist when it's sitting at cold storage. So a lot of these investors, are already comfortable with the risk they're taking buying ETH as it is. And so that next step might be what I actually don't think that the underperformance of Ethereum ETFs is pinned back. It may in part be affected by this, like you're mentioning. I don't disagree. But I think the bigger issue for ETH is that it's got the value proposition around Bitcoin is very clear. It's digital gold. Like it's digital gold. It's not supposed to do anything else. It's a fixed supply with a potentially infinite supply of dollars. It's an asset with a fixed supply that's priced in a future infinite base. So like the price is going to be 21 million over infinity, like Nut says. Like so, that's a very clear reasoning on why you want to buy it and why you want to buy gold. With ETH, you have an additional challenge, which is ETH is a smart contract platform. And there are many other smart contract platforms out there that rival ETH. So, for example, Solana. Everybody talks about Solana. I hear more investors in the high circles. Investors rarely bring up ETH anymore. Most people are talking about Solana. They're talking about Tron, or not Tron. Sorry, Ton, the Telegram token. And ETH has kind of lost a little bit of the allure in some circles because it has competition for other platforms that can do the same thing. And they'll tell you, oh, well, it's proof of stake. Well, this one's proof of stake. No, but this one can do this many transactions per second. Well, this one can do more. And so there's this like arms race around the smart contract chains, which doesn't really happen in Bitcoin. And so you have if you're a person that wants to diversify and buy assets that are smart contract based, well, you can buy a bit of ETH, you can buy a bit of Solana, you can buy Cardano. Like there's the plenitude of things that do similar things or pitch you on similar things. The only remaining chain that has a fixed supply and works under proof of work at scale is Bitcoin. There is no second best, as Michael Saylor says. Like ETH is a very different investment thesis, and I think that's more the challenge than the foregone staking yield. But they all play a role.
Okay, we are running out of time, unfortunately. But that being said, how much space do you think there is for other platforms like Ethereum, like smart contract platforms? Because digital gold, Bitcoin, we know that's its own asset. It's the most decentralized. It's the first. It's got its place in the world. The smart contract platforms are still trying to figure it out. We're still trying to figure out which one is there to survive, which one is fulfilling all the promises. How many do you think there can be?
That's a hard question to answer, but I think, you could have infinity uh, competitors of tokens. I think of smart contract platforms. The the real hard thing is to see where will there be value accrual to the native token, right? Like I think investors are as an investor, you're always looking at which one of the tokens is going to accrue value on the chain. As a developer, you don't really care. So I think that's the challenge: is that the people that build on it don't necessarily care so much about the value accrual; they care about the tech.
Yeah.
And so there's a bit of a disconnect there, and it makes it challenging for the value to accrue to the token. The networks can be great. The tokens, I'm not sure.
I understand. Okay, Mauricio, thank you so much. We've got no more time left, but we have to have you on for a full podcast episode. We haven't even gone into the US elections. We haven't even gone into the next 5-year prediction. But thanks so much for joining me today.
Likewise, man. Thanks for having me.